Welcome to the the next seminar from C1M, and we will be getting starting just now. As always, this is just for educational purposes. My name's Richard, one of the C1M team members, and I'll be doing these and putting them up onto YouTube. So if you're seeing them on there, this is part of C1M.io, of educational platform, as well as a growing community in Discord, where we put out trades, ideas, we have alerts running through. So you choose to follow any of my trades at your own risk. I will not be held responsible, etc. And for sure, give me credit if and when you make profits off what we're talking about. So today's seminar, yesterday I talked about what did I talk about yesterday? Yesterday I was talking about candles, chart patterns, and the interactions around support and resistance lines, really, with the chart patterns that we're looking at. Today I'm going to be kind of leading on from that. So if you haven't seen the video yesterday, that's fine. On our YouTube channel, you can watch it. If you're already on there watching this now, you'll see it in on one of the playlists. And this is kind of leading on from that. So, yes, we're going to be covering some general technical analysis, talking about Bollinger Bands, Ema'S, exponential moving averages, and then we'll do a bit of Q&A and do a couple of trades. So let's go on to the wonderful Binance. Let's go on. I've just picked a random coin here, XMR. Most things are moving up, which is good. So let's here we go. So there are different ways that you can spot trends in the market, and very simply, you can look at a market and go, right, you can see this is diagonally moving up. So on this time period, 1 hour, day after day after day after day, yes, we have these drops, but we just have an upwards momentum. If I was to draw a trend line, very rough, very vague, well, not that vague, but you can see, trend lines you can put into the market, and it's kind of as these coins are moving up, especially with the top and the upper Bollinger Band interactions, when they have a pullback, they will retrace to the middle Bollinger Band or to a trend line or to a moving average and then spring back up again, which you can see it happens kind of time and time again. So different ways to spot trends in the market. Well, visually, you can just look on it and go, right, I'm on 1 hour candles here. It's all relative, so let's look on 15-minute candles. You can look on 5 minute, 1 minute, and go much more zoomed in to the market in the time frame that you're looking at. So by going on this, cool, I've identified it's in an upwards trend. So there are shorts to be made when it's interacting with the upper Bollinger Band, but my general advice, and at the moment, we're in February and everything's moving up. So it's all about trying to get right. If this is pulled back, is it around a trend line? Is it around a middle Bollinger Band? Is it going to be continuing up, which a lot of things are doing? So general technical analysis is when you are coming onto a coin, and again, this is leading on a bit for yesterday, but you want to see where it's at. This right now is kind of the highest it's been for a while. Get a feel for the candles, the coins, the price action that you're looking. Get used to support resistance. Again, I covered this sort of stuff yesterday. You can see here we've had a bit of a double top and it's come down. However, excuse me. You could even say this is a bit of a bullish pennant, which is characterized by having a big run up, and then the resistance and support lines are coming together. And it's coming together to a point where it's either going to continue up, aka it's a continuation signal, or it won't, it'll get rejected and it's going to be coming down. Bitcoin at the moment, wow, just holding over $52,000. So, yes, Bollinger Bands are amazing. And, you know, I know there's many different trading styles out there. Most traders that I know use them. And we have the middle band, which is on a length of 20. The upper and the bottom, which are just standard deviations away from this moving average based off the price action. But it's on a length of 20. So, as well as when I'm talking about trends or technical analysis, you can go on a market and you can look and go, right, bigger picture, let's zoom out. Okay, this thing is moving up. Brilliant. When you then start to look at and incorporate your indicators, your Bollinger Bands, and when I talk about your EMA shortly, then again, different lengths or different settings on the indicators are going to represent different things. So a length of 20 is quite short-termish, which is good, because what we and most of our traders that we're doing and teaching and the community we're growing, they're quite, you know, the trades or positions that we open, generally, you know, you're in and out within a couple of hours. So it's good to look at the shorter-term trends, but as well as taking in the bigger picture here. You know, with the interactions of the upper and bottom Bollinger Band, if something is moving in an upwards direction, well, you can see it will hit the upper Bollinger Band, it will come away, it'll hit, quite often retrace to the moving average of 20, the middle band, and then keep going up. So it's hugging the upper Bollinger Band. We then come sideways, we have a bit of a squeeze, and off it goes again. So what we then do when we have our Bollinger Bands and with the moving averages that we've just been talking about, a length of 20, what we can then add is, or are, the EMAs, exponential moving averages. So the visual aspects, which I've just talked through about trends, is where you can see, you know, the standard deviations are going to not always be consistent. They're going to break out, come down and squeeze. What is consistent, because it's based off the previous 20 lengths, is this middle band. If it's moving up, the coin's moving up. If it's moving sideways, the price action is in a bit of a channel. It's moving up. That's very general, but in a nutshell, that's kind of what we're talking about. But by using EMAs, you can then see the relationship with where the price action is in comparison to the bigger picture. So I have the Bollinger Band set up here, and I have different moving averages. So I'll start with the longest one, just like when I came on to the screen and looked at the bigger picture. Best way, and what most traders use for looking at a kind of bigger picture moving average, is using a length of 200, and that is this yellow line here. And again, it depends on what time frame that you're looking at, but it's all relative, because this is based off not the past 20 lengths. It's based off the previous 200 in terms of the moving average. And again, you will see this is just 3-minute candles. Let me just go on to 5. You'll start to see patterns for yourself, like you're getting used to seeing around the middle Bollinger Band. You know, if something hits the upper Bollinger Band. Likewise, you're going to start to see when certain price action or candles, or even EMAs crossing over each other, can be an indication if something is going down, aka here, when it's going to start moving up. So this doesn't move quite so much. It's got quite a nice flow because it's based on a longer time period. Then we move on to this purple line. Let me just zoom in a bit for you guys. The purple line is based off a length of 50. So without, going through the obvious, the middle bands are on 20. The longest, or for the bigger kind of trend that you're looking at, we have 200. So this is 50. It's a bit more kind of medium term. And again, you're going to see some patterns. You have what's known as a golden cross, and that is, it can be bearish, it can be bullish, and it's to do with points like here. When the lower EMA, so the 50, comes over the 200, the higher EMA, it is a signal of a potential even momentum. If that coin's already going up, it's going to keep going up. Likewise, when the higher moving average the lower moving average, 50, crosses over the higher. So the 50 here comes over the 200. The purple comes over the yellow. It's a sign once that moving average is under the 200, the 50, the 20, the 12, then it's going to be coming down, you know, based off the moving averages. So we're adding this to our education, and most one-on-ones, one-to-ones that I'm doing, and with the trading that I'm doing myself, you know, we have these alerts coming through, but it's a very good thing to look at. You know, I can chart very well, looking at candle patterns, looking at resistance levels, etc. But it's good just to get a bit of a feel what we want to see. If something, again, this is just me here speaking, if something is bullish, if something is going up, if it's going to continue going up, then we want the moving averages on top of each other. So like this, I have the 200, then the 50, then the 20, then the 12. The 12 I've not talked about, so let me talk about it. It's a moving average of 12, so it's shorter than the middle Bollinger Band, and is the go-to setting really, or what a lot of traders like to use if they're doing scalp trading, which is what we like to do. You know, in and out of a coin, put your position in, put your TPSL, and leave it. And, you know, either you're going to come out at a loss or you've made your profit. So the 12 is over the middle Bollinger Band, which is 20, which is over 50, which is over 200. They're all lined up bullish. Up we go, up we go. And it stays that way. Then as the Bollinger Bands start to squeeze, and just like a Bollinger Band squeeze, it means the volatility over the previous time period is kind of coming together off these moving averages. You can see we're bunching up. We have a Bollinger Band squeeze. We have, you know, the 12 going under the 20, over the 20, under the 20. So it's quite sideways. But then it continues up. We have the 12 over the 20 here. And what I do want to show you, which should be happening just now, not just yet, but you should be able to see, this is kind of tailing off a bit. We've gone up, we've gone up, we've gone up. This high is lower than this high, or it's a double top. You know, it's pretty much a double top. Price action there, come down, up, try it again, no, it's coming down. Then we have the 20 starting to make a downwards move. The 12 is under the 20, but it's all bunched up at the moment. Again, when these start to make its way down to the 200, and then if it's falling through the 200, you know, if you're in any longs, or you're thinking of longing, then just be aware that it could be a sign that, well, not to long, because the upwards momentum is slowing down and it's going to start to come down. That, as well as everything else that we teach in our course. So again, if you're watching this on YouTube, you know, below we have the links to our website, which is where we have all the education. And we talk through all of this, you know, whether you're new to trading or you're experienced, it's for all levels. We have information on the candles, the indicators, the Stochastic Rsi here, which gives you an indication if something is overbought or oversold based off this index on the right hand side. So we like to package a few of these together to give us an insight of what should happen. Again, the key thing with indicators is that it's just, it's just going to give you an indication of what should happen. It can quite easily go the other way. So yeah, that's EMAs. You know, maybe don't start with so many. The two you can quite easily see actually with the bigger time frames if something is moving up. So if you're new to EMAs, you know, you just go on to your indicator part here, EMA, and it's the moving average exponential. Once you then go on it, I have different colors for different lengths. It kind of makes sense. And then you can just, you know, put what color you want for each length and just get familiar. Generally, if the 12 is under the 20, it's a sign the price is coming down. But then comes the bigger picture of depending on what time frame you're looking at. You know, if you're looking at 1 minute candles and you're looking at you know, the 12, the 20s, etc., then of course quite a lot we're going to be having the 12 coming over under the 20, over the 20, under the 20, over the 20. We're bunching up here, we're bunching up there. So like when in my seminar yesterday when I talked about the bigger time frame, the same really applies with EMAs. I like to look at it on 1 hours. You know, it's even on the 1 hour candles, you can see here, it's bunched up, we're going in a bit sideways, okay, it's a bit unsure, okay, we're starting to move our way up. The K has come over the 20 and over the 50, and up we go. The K stays over that 20. So, as always, 1 hour candles I love, and 15-minute candles I love. For those of you that are on the seminar now, please, as always, feel free to fire a question into the seminar chat if you want some more information on EMAs. I will just check the check the chat channel. It's quite a mouthful in just a moment. So that's, you know, general TA. I'm just going to be doing more and more seminars on this and just talking. As I say, we have our community Discord, which is where we're just all sharing ideas and technical analysis that we're looking at. It just takes practice, like with anything. Bollinger Bands, get used to looking at them. You have the squeeze, you have the upwards movement, the upwards channel, the down channel, the sideways channel. Depends on the strategy you're doing, you know. If something is in a sideways motion or movement, then it's like now. Look here, you know, it's come up, it's double topped. This has come up a bit, it's a new high. And let me just zoom in a little bit. That's quite far out, isn't it? You know, this high, it's a new lower high, if that makes sense. This is high, that's high. This high here is lower than that high. So it's that as well as the chart pattern, which is forming a bit of a wedge. Again, with the alerts and looking at the charts and what's going on, just should and does help you, yeah, paint a bit of a picture of what you're looking at. And you can see now this predominant red candle, but it's still coming back to this trend line. No questions. Okay, jolly good. As I say, it's just, you'll find it through the indicator part here. Bollinger Bands have on a set of 20. EMA, just use 12 and 50 to begin with. We've got the Stochastic Rsi here. One thing we're also going to be giving more information on, and actually with the alerts we've already got coming through, just adding a couple of parameters using the MACD. Because just like when we talk about and we teach that we have the K, the green one, coming over the red. The K over the D is coming up. It's a sign again, as you can see with the price action here. It's coming out of the oversold region, so it should continue up. That, as well as this is the green one here. I mean, mine may look differently to yours because the wonderful art of being able to customize it however you want. Just like the red and green candles, I've gone green and red. I've got rid of the background, which I don't like. You can, yeah, pimp it up however you want. But this, with the MACD, you have the histogram here, which is the difference. It goes off moving averages as well. It's the difference between these 2 points, which is the MACD and the signal line. And what you need to see is the behaviors. When and again, the green one here, the MACD crosses over the signal line, just like the K over the D, and is moving up. Again, what do we have here? It's a bullish signal. When the MACD is under the signal line and comes down, it's potentially bearish. And you can, I hope you can see some similarities between the stochastic and the MACD itself. This is kind of at a new high here. What's Bitcoin doing? Bitcoin is at 51,800. So with it just dropping a bit below 52, yeah, this could and probably will continue coming down. Yeah, I mean, no, there's a few on the seminar. I haven't seen any questions come through. That is fine. So if I'm coming onto XMR, if an alert's come in, or if I'm just looking at it like I am now, what am I looking for? Let's go on to the bigger picture. 1 hour candles. There we go. Yeah, this is just, oh, let me just make these a bit smaller. That's a bit big. Just excuse my dog barking in the background at nothing. Yeah, we have a little bit of a wedge, a pennant forming there, which is a bullish signal, but it's also at quite a high point. So, yes, it is a continuation signal. However, it again is just an indication of what could happen. So we've got to wait for confirmation with this. If I'm going to go on to 15-minute candles, which I'm gonna, then you can see with this ascending trend line here, you know, this low is higher than this low. This low is higher than this low. So paints a picture that even though we've had this kind of double top, it's not going down quite as much each time. So it really is just at a bit of an unsure spot. Yeah, this with what Bitcoin is doing, 51,800, it could fall through. You know, this high here is lower than this one, which I've already talked through. Just get a real feel for it and paint a picture and see what's, you know, what is going on. What is going on with this? Okay. Well, if no one's got any questions, Bitcoin is just a bit, it's around 52 at the moment, and a lot of these coins, 51,800, you know, I put out some things on the Discord community earlier. I just want to wait to see what Bitcoin is going to do, which is another consideration with trading itself. You know, if Bitcoin is the mothership and a lot of these alts are following, then always good to keep an eye on what Bitcoin is doing. You will see that if Bitcoin has a massive drop, then you'll soon see it with whatever position that you're in. You know, even if I chart the hell out of this and it looks absolutely beautiful, looks like it's going to continue up, but then Bitcoin plummets, then this will follow. So always keep an eye on Bitcoin, do some TA on it, just to make sure that it's not going to kind of jeopardize any positions that you're in. And that is going to be kind of it for today. The technical analysis, Bollinger Bands. Again, this is all content in our course. Follow the link below. Exponential moving averages are something that we are bringing in to help our students improve their success, which it will. You know, just get used to seeing the patterns of these moving averages around the middle Bollinger Band, also around the price action that you're looking at. And that's going to be it, people. So yes, I'm going to be doing a seminar tomorrow morning. I don't know what on yet. If you want me to cover anything in particular, then drop me a message in the community, private message, whatever, and I will happily do that. We'll do a bit of trading as well. I like to get my trading done early in the morning. That's just my preference before I go training, kind of Bali, Asia time, when it's waking up this side of the world. So, cool. As I say, any questions, ask away in the community. Thanks for joining, and see you in the next one.